Alrighty, I'm here today with Luke Scott of Real Life Real Estate. Super interesting stories. So Luke he went to the Navy Academy, then he was in the Marines, then he was in the Air Force, then he got out and went in, knee deep into real estate. So he's right in the middle of his first mobile home park at this point. So super excited that you took the time to get on this. I'd love to ask some questions of somebody who just jumped into their first mobile home park deal. What's going well, what's unexpected, and everything in between.
Yeah, thanks, Jeff. This is fun. I've been looking forward to this. It has been quite the ride, kind of all over the place, which kind of fits my personality. But I've had a ton of cool experiences all the way through the military, and still involved there on a kind of monthly to quarterly basis, and that gives me an opportunity to stay connected with that side of it. But I really made the decision to step out of full-time military primarily for family, and had kind of that passive income dream that I think a lot of us have when we're first stepping into real estate. And although, as you well know, it's anything but passive at the beginning, it definitely has enabled me to be home way more than I was being in the military. So that's been awesome and a huge answer to prayer. But the first acquisition was really a connection from a friend, and that's really all I can boil it down to. Obviously, the story gets really long, but we had a local kind of mentor figure who was in real estate that was had been in parks for a while and had a few in the area, and he mentioned that he was going to be taken down or actually rebuying a park. Super interesting backstory, but he had sold this park years ago, like 15 years ago, to a friend of his. And his friend was looking to get out of it. And he had a ton of confidence in this deal, and had a lot of upside because the friend was managing it himself and was doing his best, and I don't want to say mismanaging, but left a lot on the table, really. So he was really excited about purchasing this again, and kind of taking it from where it was at the time, and building it up. So I was like, wow, I mean, this would be an awesome opportunity for me to get involved with you. I'd love to partner with you on it, blah, blah. And he kind of kept pushing back and was saying, no, the numbers are too good here, and I'm going to do this with myself, but, you can observe and, come along for the ride. And so I kept kind of hounding him for a few months, really, before anything went down, and eventually came down to the point where he's older, and he kind of had some medical complications, and he sidestepped and was like, hey, man, to be honest, I'm not in a position to do this at all now. So it kind of went from, no, I'm not even going to really entertain a partnership, to, hey, I can't take this on. Do you want it? And so the script flipped really quick. And all of a sudden I had it's a smaller park, like we've talked. It's 18 pads, and it's in a small town south of Atlanta, but a good market, and or a good spot in the town. So a lot of good longer term potential. And so I had this opportunity to kind of jump in the deep end, and it was a really cool opportunity in the sense that it was non-traditional from what I think most people understand real estate, with having to go through the full underwriting process with the bank and everything. But his connection with on a personal level with his friend enabled him to set up a uh, pretty good seller finance deal. I wouldn't say killer by any means. It wasn't a home run, but it was way better than we would have gotten with a bank. And it was something that we were able to get as a younger uh, emerging real estate company that didn't have anything in this asset class and didn't have a ton of capital that we were sitting on, put us in a position to actually acquire something that was the perfect size to start with. I kind of labeled it my starter park, so to speak, because it's just big enough to actually produce some profit, but not big enough that it's more than I can figure out on the early side. So yeah, so we were able to take that seller finance deal that he structured and run with it, and that put me in a position then to turn around and raise some capital as well. We did have to raise some capital. We could have, well, not quite. We almost could have gotten it all ourselves, but by turning around and raising some capital, that really exposed me to that side of the real estate piece, and then we didn't have to put in as much of our own capital as well. So that was a super cool
Nice.
experience. Um, so yeah, I could go a bunch of different directions. I've been rambling a little bit. Anything specific you want me to tap into there? That's kind of
So
obviously the over the
yeah, so you got seller financing on this deal, which is huge, right? I
yeah.
mean, especially I love seller financing. In the beginning, I thought it was cool because you can negotiate different terms. in retrospect, I've done it on, I think, 4 deals now. The nice part about seller financing is that you don't have to go through a bank, which it's not saying that banks are the worst thing in the world. Banks are kind of the key to having a real estate business. But on your first one, it's impossible to check all the boxes the bank needs, right? It doesn't matter what you've done in your background. The bank has to take this to the board and say, has this person ever operated in this asset class? If it's your first deal, there's no way you can, right? So a lot of people struggle with that first deal. And there's, like, I always kind of give people 2 different paths they can take here. Either you find a partner who has done it before and you go through a bank and you get it done, and they will check the box. So when the bank's looking at the total ownership structure, like, yeah, somebody's done this before, we're good. Or you get seller financing because the seller doesn't care. Right? The seller, I shouldn't say they don't care, but they don't care that you haven't done this before. Mm-hmm. They just want to meet you most of the time in person and get to know you, that because they're loaning you a good bit of money. So this is kind of an interesting situation because a friend was basically the introduction. A friend of the seller was the introduction for you. So I'm guessing he had already kind of worked out some seller financing and then kind of just took it to you, and you hadn't met the seller at this point, right?
I had, because we actually went down there and met him back when the original buyer was still on the table. So got to interact with him then, because at that point I was just kind of going along in the sense that I figured I wasn't going to be able to be a part of the deal, but I could kind of learn from the process. So I was kind of hanging around with him as he was doing some of his due diligence. And so got to meet the seller. And so that was our first interaction. But yeah, you're 100% right. Like if I had to go out in that same position, if I had to go out and try to find, traditional financing, it would have been much more difficult. I think I would have had to raise a lot more money. So this totally made a huge difference in the financing standpoint. And to your question, yes, he spent years working on this guy, trying to buy this park back from him. And this was kind of the culmination of multiple years worth of negotiating. And he was able to pass that off. It wasn't without a little resistance from the seller because of exactly everything you just said, right? There was already some trust between them. And now this was, he was taking all that trust and passing it off to me, who was a guy that he didn't know. So he ended up tacking a little bit more onto the price, but we were able to keep the same rate, and get the financing, which really at the end of the day was the main thing. So yeah.
So what were the terms of the seller financing?
We got it at a 6.7 25-year AM for 640, which was like, I think he was originally looking for 620. And at the end of the day, it was already cash flowing as it was, and it had a bunch of upside that we're working on now, and we've been cash flowing the whole time. It's been So that should answer your question. Those were the terms. Anything I missed there that would help clarify the deal?
What loan to value was that? What was your down payment?
We were at just under 70. I forget exactly what it came out to. But yeah, it was just under 70.
70%?
Mm-hmm.
Okay, gotcha. So in that case, 70%, that's what a bank would do. 6.7, that's better than a bank will do right now because you bought this recently. Yep. 25-year amortization is better than a bank will do recently. So, what's interesting is most of the time when people make an offer, they'll have a seller financing offer and then they'll have a traditional, they call it a cash offer, but they're going to get in a bank to it. They're not actually buying it on cash. Yep. I see this happen all the time, and I do it too, where you give a higher price for the seller financing offer than you do the cash one, which I'm going to stop doing because everybody just says, I like the price on this offer. I just like the terms of this offer. Totally. It's like, hey, that's not why I paid you. But
yeah, well, you mentioned that. That's essentially what happened. I think we probably overpaid a little bit, and part of that was because he was passing off the trust that he had with his friend, right? So there was some there. And then obviously he knew we were getting a better rate than we would with the bank. And I didn't have to go through the underwriting process. So I wasn't super stressed about overpaying a little bit just because we were actually getting into a place, and the amount of headache that would have gone to trying to figure out how to do it with the bank would have been. So, but yeah.
How much do you think you overpaid? You said it was about $20,000?
That's what he originally had it priced at. I've talked to guys in the market down there without getting a full actual appraisal done recently. I've talked to guys that are on both sides of the fence. I've talked to a broker down there that said, "Man, you bought this great," and he's been operating in that market for decades. And then I've talked to other guys who are like, yeah, it's about right. So I don't know. I think a lot of that's just speculation. I think if anything, I might have overpaid by 20, 30K, but not negligible, I think, in the long
Yeah.
run.
Well, what's interesting about this, and I didn't learn this till recently, because I always kind of just figured, oh, you overpay for self financing because there's better terms, but there's actually a mathematical answer to how much you can do that.
Mm,
And it sounds like you didn't underpay because essentially what happens when you use seller financing, you're buying two
sure,
things. You're buying the property, but you're also buying the terms.
sure, totally,
Which a bank, you're not doing that. You're just buying the property. So,
totally.
like I had a deal where the guy financed it at 0%, and I overpaid by a, a good bit.
Yeah,
And it to me it
you're
was like,
buying those terms.
yeah, you're buying the terms too. So I think a lot of people don't want to do that, but now obviously you have to do it within reason. Like if you pay too much, you can't sell it for more, you can't refinance, but there is a reason for that. I think a lot of people would benefit from learning how to make that calculation. Basically what you do is you just figure out the monthly cost difference
Mm-hmm.
and you use the market interest rate to figure out what those cash flows are worth and however
Sure,
long you're going to hold the loan.
sure.
And I've seen people who will offer like 600 cash or like $1 million seller financing. It's like, no, it's not worth that. It's not worth that. Don't do that. But
Run
it
your
sounds like you did
numbers.
it. Yeah, exactly. It sounds like you hit it right on the head and you got it seller financing. And honestly, the other thing that you saved by doing that is there's a lot of third party reports like the appraisal and other stuff that you don't, I mean, that you still need surveys and whatnot, but there's a lot that you save by doing that. And on the backside, let's say you get the value of this property up, you can get it up quickly and refinance quicker, in my opinion, because you don't have an appraisal from 12 months earlier saying it was worth X, which is a huge, huge advantage because it's tough for an appraiser to come back and say the property's worth a hell of a lot more than you paid for it if you didn't do too much. I know, no, I've talked to you about this deal before, so I know you're doing a lot. But
Yeah.
well, that's awesome. So you found it basically just through networking. You met another guy in the industry. He was doing it, and then right place, right time. He didn't want to take it on, and boom, there you are, ready for it.
Yeah, yeah, and like I mentioned to you off show, it was just kind of a gift from the Lord. I didn't really do anything. It just kind of landed in my lap and I was like, this is awesome. Let's do it. Let's give it a whirl. Let's make this happen. So it's been a ride. Like I've talked with you before, learning a ton, in the process, which is often hard because you look back, you're like, man, learned that lesson the hard way. Man, learned that lesson the hard way. But you also learn the lessons well, and you're in it, and so
Yeah.
it's been a ride for sure.
Well, at the end of the day, you can't learn everything from books and courses. And I mean, we live in a generation where there's a course on everything. You can get a
Yeah,
course on how to sell a course.
yeah,
At the end of the day, you've got to educate yourself as much as you can, but
hmm
then you've got to just understand once you buy the first one, you're immediately going to be like, oh crap, like I don't know everything. And that was me. I was especially susceptible to it because I was a broker.
mm,
And so I had done a lot of mobile home park deals, but the
hmm
day it closed, I was done. I knew nothing about what happened
yeah,
after that, but I thought I did. My very first day, my wife and I had a dinner scheduled. Hey, we're going to close. We're going to go out to dinner at Applebee's or whatever. We lived in Alex City. There wasn't much there. And at the closing table, the seller literally hands me the keys to the park owned homes that we were inheriting. It wasn't many, but it was a few. And he said, oh, by the way, this guy in lot 7, he's been without AC for a couple days. I was just going to tell you now.
wow,
So it's July, Alabama. There's a guy in a 50-year-old mobile home, and I go in there. He's just in an adult diaper with a fan on him, just profusely sweating. Like, can you please get me an AC? So I've got to go to Lowe's, which is an hour away. Drive back. I got the wrong AC size, so I got to go back to Lowe's another hour. It was the whole day just to get this guy in, and I was immediately like, okay, I don't know what I'm doing. I've
yeah,
actually have the responsibility of this property now. So it's a slap in the face for sure. But ultimately it's worth it. But I'd love to hear. So you're right in the middle of your first deal now. What would you say is the one, well, not your first deal, I should say that. You'd done a couple of like Airbnbs and whatnot before this.
Yeah, no, we've been at this for about a year and a half. We were primarily in the single family space, mostly long-term rentals and Airbnb. And then prior to the park, we picked up a duplex and working on pad splitting that up in Atlanta. So yeah, we're kind of all over. And I think long term, I've got a couple partners. Long term, our goal, or yeah, our focus has very much shifted to the multifamily space, and that was really what drove this desire to get into the mobile home park asset class. But yeah, our foundation was single families. So yeah, sorry, back to your question. I might have cut you off.
So you're right in the middle of your first deal. What would you say is the most surprising thing where you're just like, I didn't realize I was gonna have to do this. Like this is because everybody does it. You know, we get so excited about the deal and the number, and then the first day you own the property, it's like, whoa, there's not just the number side, there's the real world side. What has been the biggest surprise to you? Like, this is something I have to do when I own property.
I mean, I think your story that you just told pretty much sums it up. I think a frustration that I'm still dealing with, and we actually talked about this a couple weeks ago, with the market that I'm in, I've struggled to find a reliable property manager to help me deal with that exact story, right? With the day to day. Coming from the single family world, I kind of wrote it off as, I'm going to find a manager. That's all my properties are managed. That's not going to be an issue. And I did some hunting prior to close and wasn't able to kind of nail anybody down. I was like, not a big deal. I'll find one. I always do. And for whatever reason, I think the combination of it being kind of a tertiary market and then also asset class that just doesn't have or has some stigmas, obviously, but there's just not as many property manager type services in this space. It's proven more difficult than I anticipated. And that has then led to the ball being in my hands, like you just described, right? For much longer than I anticipated or really, really want to. So I'm very much in the same boat. It's an hour south of me. Fortunately, I've found a really good, reliable handyman who I've been able to really lean on for almost everything. There's obviously a lot of more of the soft skills that are required that a handyman can't really do. That's really what I'm kind of in the hunt for now, so that I can step away from day to day and actually focus on the next project, right? That's kind of our goal in this space. But I think that's the answer to your question for me is if I had another chance at this run, I would have, obviously the due diligence is super important, right? Focusing on the property, but what I missed was the more kind of research and more intentionality on leaning forward on having the team in place, because by not having the team in place, now my time is so sucked up in the property that I can't do, forward looking acquisition stuff, and I can't even really spend a ton of time finding or interviewing property manage potentials because I'm so involved in the property. So I think that was probably, if I could put my finger on one crucial miss for this specific property, I think it was that. And I think that again is unique to both this market, obviously a bit to do with the asset class, but that's been a little bit of the frustrations thus far.
Yeah, and I think you hit it on the head. It's a lot of people don't realize, oh, I'll just hire a property manager. You can hire a property manager. That property manager is probably going to be local. They're going to mostly manage single family rentals with a handful of multifamily. Almost always, they have never managed a mobile home park. What ends up happening, and that's exactly what we did at first. We hired somebody similar. She actually had managed a mobile home park, but it became so much of managing them that we just decided, hey, this is just there's just an in between. We might as well just manage it ourselves. So we did that for a while. But the reason that I've found that it's tough is that they want to manage it like it's a single family rental or a multifamily, and it's not. Like, I've had people send people out to do maintenance on a house that's not ours. And like, you want to talk about going from 0 to 100 in terms of anger. Imagine spending $2,000 to fix somebody else's houses. But it's so hard to get that level of detail with them. They're like, the person did a maintenance request. The property management company, if they're a company, they've got several people that you would have to expect every single person at that property management company to understand that nuance.
Totally.
And that's why I've got some parks that are all park-owned homes. I've got some parks that are all tenant-owned homes. The worst is a mix. The mix is it makes it so difficult to manage because you basically, even when you find that property manager, they're going to call you about everything just to double check. Because even if it was a park-owned home, well, maybe it's a rent-to-own now. Maybe you should. So it just gets
Totally.
it gets tough. But as you get, it's one of those things like it will teach you so much about how to manage them. And to be honest with you, even like a tough turnaround, like getting the property stabilized, that's probably not a time to have a property manager involved, anyways. Like you want to be involved in that process. I think the name of the game is get it stabilized and get it to a point where you just expect them to maintain. And once you get at that point where they're maintaining, hey, then you can hire somebody and then focus on the next thing. But
Sure. No,
yeah,
that's a
it's a
great point. And that's kind of where we're at because regardless of if and when I get someone to take over a lot of the management responsibilities, there's still so much of it on the stabilization side that I'm going to be involved with day to day that, yeah, no, that's a great point.
yeah. And I never really thought like I always heard of these big groups charging asset management fees, and I was just like, that's a racket. What is there to do? Like you're just
Right.
managing the manager. I can tell you, it is 100% a thing.
It's a real thing. That's
There's
for sure.
there's a difference between managing the property and managing the asset. And I think at this point I've decided I don't ever want to outsource the asset management
Hmm.
because that part is fun. Like we're finding creative ways to get homes and stuff moved into the park. No property manager is really, I shouldn't say no, but most property managers aren't going to do that unless they're really, really good at managing mobile home parks. But the day to day stuff of like, hey, it's the 5th of the month. Let's make sure everybody paid. Let's make sure they get notices. Let's make sure we're getting them an eviction if they haven't done that. That stuff never ends.
Totally.
And it doesn't add a ton of value to the deal unless you do it poorly and then you start losing value. But the asset management, I think, is what you're going to learn now. And so if you learn, I found a good way to get this empty park owned home and turn it into a awesome tenant owned home where they actually care about it and they're paying us a really high number for lot rent. That's the stuff you'll always do. And I think you're learning it. You're getting a really good education in it right now. So just like accept
Yeah.
the fact that like, hey, this deal's going to teach me so much. So the next 10 deals are going to go so much better because of what I'm going through on this one.
Yeah, totally. No, and that's kind of why I just keep reminding myself is like the lessons here. Again, going back to my idea of like a starter park, that was kind of the whole point. It's like I have so much to learn on this one, and it's gonna be a grind right now, and that'll pay dividends in the long run. So just kind of leaning on that right now.
Yeah, yeah, it's cool. I mean, it'll definitely teach you something. And there's a lot to be said about being an operator and like actually operating the property well. And a lot of people I meet trying to get into the space or they kind of poo-poo the idea of a smaller park. But you know what? When you don't know, it's probably better to start on that because you're only, I mean, with the price you mentioned, that's a single family house in a lot of markets. It's in the grand scheme of things, it's not a lot at risk. You can really learn on that and then scale into the bigger ones once you know you have a better idea of how you
Yeah,
like operating them.
yeah, and that's really the hope. So yeah, totally.
Nice. So, taking a step back, you had done some single family.
Hmm.
What was it about mobile home parks that you said this makes sense? Because as somebody in the industry, it makes sense to me. But I also know a lot of people who aren't in the industry, and it's just like a complete foreign language to them. Like,
Sure.
why in the heck would you buy a mobile home park? And I've always found that people who get into it are very open minded. But I want to hear from you, like, kind of what jumped out to you of like, oh, this is actually really interesting. We should look into this.
Yeah, and a lot of this I'm still learning to be 100% honest. And I think the two probably the two biggest variables that really made the jump enticing or worth it for us were the margins, the ROI margins between a manufactured home and that space versus stick built home. What it would cost to upkeep, what it costs to finance, to buy, comparatively to a house, especially a house like you just mentioned because we're just south of Atlanta. We've got homes in Austin. The price points on those types of homes and the cost to maintain those types of homes are just totally different. And then you compare that to what you're going to be getting in rent. Granted, you're going to be getting a lot more in rent for a stick built home, no doubt, especially in a primary market. But when you do the comparison to the ROI comparison to what it costs to acquire and then to maintain, there's a pretty big discrepancy. And then on top of that, what we're kind of leaning into and looking to the future, and I think what a lot of people in the real estate space at large are talking about right now, is just this affordable housing. People are saying crisis, and I think we're trending that direction. But just this need, it's a emerging need in the market, and I think with the trend that the economy has been going. There's just a need for affordable housing. That's just a reality. So finding ways, and mobile home parks are by no means the only answer, but if you've got a product that fits a market need, there's going to be an opportunity for return there. So I think those are probably, to answer your question, are the largest variables. Obviously, there's stuff on the tax side and other variables that I'm not as read into and I'm not as up to speed on. I'm still learning a lot about. But yes, to specifically answer your question, I think those were the two largest variables that kind of drew us to say, hey, let's take the leap and give this asset class a real try. And then, to be honest, going back to the acquisition story, it was one of those things that kind of fell in my lap and was like, all right, well, I could continue to hunt for an apartment building and try to get some traditional financing and try to raise a bunch more money, or I could take this super cool opportunity to take advantage of the seller finance deal, acquire a cash flowing asset that has a bunch of room for increased value add, and go from there. So, yeah, a little bit of both, to be honest.
Nice. Yeah, it's you mentioned the affordable housing, and I find that a lot of people get confused on the term because affordable housing can mean just, hey, this is housing and it's affordable, or it can actually mean like an actual government program where they're getting involved to make it affordable. Now, you mentioned it's not the only solution. I think it is. Like, I honestly think if you take the government out of it and the government just doing some, just writing people their rent check, yeah, obviously that's affordable. But if you want to just talk about fundamentally affordable, people always talk about the affordable housing crisis, just like build more mobile home parks. That to me is the solution. I mean, you can own a house that you can buy for 50 grand, 70 grand new. Where else are you going to do that? And then you rent the land. And then if you save up, you want to buy your own land and move out, you could do that. Like it's a solution. And I think the problem is it's just so stigmatized that people don't want to do it. But on top of that, cities just don't allow them, right? So it really is a solution. And I would say a lot of people are starting to wake up to the fact that they just look at the numbers and they're like, oh my goodness, this actually works. Yeah. Now, it's not perfect, right? Because mobile homes depreciate. Mm-hmm. So if you live in a mobile home, you're not going to get that increase in value that you would at a single family house. You actually save more a month. And that's what I'm starting to notice in my park. I have a lot more young families using it as a starter home than I have in the past. And they're looking at it from the perspective of like, okay, their choices are we can use an FHA loan. We can go put 3.5% down on a stick-built house, which now is like $400,000. They're paying PMI. Their payment is high, and they could rent a house cheaper, so they're not going to do that. Or they can, what a lot of them will do, either buy a new mobile home that they're eventually going to move out and pay lot rent, which is usually $500 to $1,000 a month cheaper than the other option. So makes sense for them. And then some of them take it a step further and buy a used home and rehab it. And you want to talk about like weird things from outside the industry. People are they think I'm lying to them every time I tell them what we buy used homes for. It's like, yeah, $3,000 free. They're like, what?
Yeah, free.
No way. Yeah, it happens. So with your park you've got now, are you trying to do any infill? Like, are there any empty lots that you're trying to fill up?
Just one empty lot, and yeah, we're looking to fill that out. We've got to confirm some stuff with the city that I don't want to. It's been empty for years, so I got to make sure I got my ducks in a row there. But yeah, just one. Thankfully, again, it's small, so we didn't. Yeah, not a huge, and the land is small too, so there's really no room to expand. It's just this one last lot. But then something you mentioned earlier, which we're right in the middle of, is being in this in between stage of having some park owned and some tenant owned, because our goal is to get to 100% tenant owned, and in the meantime, we're going to be in that in between space. But yeah, besides the one infill, that's it.
Yeah, and infill is a tricky thing. It's a lot of people think it's like, oh, you just get new homes to move in. Now, certain parks you can do that. Certain parks, new homes will just move in. I've kind of had to work for all the used ones I've had, so it's good that you don't have a lot of infill.
Yeah,
that's probably, I'd say, in the mobile home park space, one of the tougher deals to pull off is an infill deal. But it sounds like you got a really easy. Relatively speaking, a relatively easy turnaround. Like you don't have to infill. You basically, correct me if I'm wrong, but you're converting park-owned homes to tenant-owned homes.
Yeah, that's the goal. We're the plan right now is to either give them away and just request or just charge the lot rent essentially, or if we feel like there's enough value in the home, then we're just gonna our goal will be to turn the current tenants into rent to own tenants, or in the process find rent to home tenants. And then something, I'd like to talk to you more about at some point is our plan really at this point right now is just to finance, just to purchase a home for that empty lot, and then same thing, just turn around and resell it on a rent to home type of situation. So I'm sure there's pros and cons there as well, but I totally agree. Not having that extra variable of a bunch of empty lots to have to infill in on top of all the other things that we're dealing with right now is definitely a good thing, because I got enough learning on my plate right now. So
It's one of the coolest things about it, and it's so cool to see a park fill up. I'd say, to your point about buying the home, I think it's a viable option. What I would just make sure that you analyze is, what is a full lot and market rent worth, right? Are you paying less than that for the home and getting it filled? Because I see some of these big groups do it, and granted, they probably know something I don't, and they're way ahead of me, but they'll pay like 90,000 for a home, bring it in there, and just rent it out, and the lots in that market are worth like 60,000. It's like, to me, it just doesn't seem worth it. Like, why are you taking on that much debt for a home that's going to depreciate? Keep that on your books until, who knows when, to get 60,000. Like, that doesn't make sense to me. But again, like I said, they probably know something I don't. And they're probably making so much money on renting the home that they've done their math and it's fine. But, for us guys who are doing it with our own money, and, we have to be smart about it. That's kind of the price point I have. Like, what's a full lot worth? Now, I don't want to spend 30,000 to fill up a lot that's worth 30,000, but if you can find a way to spend 10 right before a refinance, I think it works. And that's what I would tell you to do. It's like, right when you've done everything else and you're getting ready to refinance it, I'd spend the money then, because then you're immediately going to get it back when you refinance it.
sure.
Versus, like, in the beginning, I just kept filling up lots, and it was really cool to see a spreadsheet of what this property was worth. But I still need to eat food 3 times a day. I need the cash for something.
Yeah.
And I just did way too much of that. And then, like, I couldn't turn around and get it out. So I think you're doing it the right way. Fill it up, get all the easy stuff figured out. And you'd be surprised. Like, if you advertise that lot, if you text your tenants once a month, like, hey, if you know somebody who wants to move in their own home, we'll pay you $1,000.
Sure. Yeah.
Like, when that happens, that is the best $1,000 you'll ever spend, because you just made yourself $40,000 in value on the park. And as long as you keep advertising that empty lot, call some local dealers, you'd be surprised. Like, mobile homes don't lease up in that regard like an apartment would. But over the course of a year, you'll probably have somebody just organically move in there, as long as they see that you're taking care of the park. And then that might save you all the money. You might not really have to spend anything.
Yeah. No, that's a great point. Yeah, good stuff.
So you probably have more stomach and preparation to show up for a mobile home park your first day than most, because you're a combat controller in the Air Force. So you've been through some training. But what was that first day like? Like, okay, I've got to go meet the tenants. This is my park now. I can't have them think that I'm just some soft city slicker, and then nobody's going to pay me, and then it becomes the whole thing. What was that first day like for you?
I mean, to be honest, probably a little anticlimactic, because that's kind of how I was going into it. I had my binder, my clipboard with my notes, and all my leases, and went down on a Saturday so that I could catch everybody, and all the interactions were just like cordial and quick. I think the previous owner had done a bit of kind of lead work, like, we're selling the park, the new owner manager will be around in the next couple weeks, and but then about half of the tenants were already, I mean, it was relatively early. It was like 9:30 on a Saturday morning. I was like, everyone's going to be home, right? But then, like a third to almost a half of the tenants weren't even there, so I just kind of had to leave them a note, leave them the lease and stuff. And it was pretty uneventful, to be honest. So the drama, has escalated since, and there's been, plenty of things that we've had to deal with. But yeah, I went into it with the mentality of, yeah, just anytime you step into something new that's unknown, right? Tried to be as prepared as I could, and yeah, there really wasn't really not a lot happened. I had a few short conversations, and the typical complaints. Most of them had something here or there they wanted to complain about, and I made note, and we've been able to make some good grounds with some of those tenants, being able to take care of some small stuff that for whatever reason the previous owner was kicking the can on. But yeah, day one for I think in retrospect, thankfully, was not that hectic. So
Were you just basically like changing ownership, or were you raising rents substantially at all? Or
I think that probably helped. No, we there was so much bill back opportunity that the seller put in place but never executed. The previous owner put in place but never executed on. Like he spent the money to put in fancy Wi-Fi water meters at every unit that he could monitor remotely from his phone, tracking all the usage for every home, but never did any sort of bill back. The only thing they were paying for was power. So we basically decided that instead of coming in, because a majority of the units were well under market rent, instead of coming in and jacking everybody's rent up right away and causing, more chaos than we were in a position to handle, we decided we were kind of going to slow roll things, leave it status quo, let them know that they can expect to start paying their utilities, within the next 60 to 90 days, with the idea and the plan that beyond that, we are eventually going to raise rents and we're going to have to on a majority of the units. But to try to do all the bill back and start raising rents all at once was just going to cause more chaos than we wanted to deal with. We didn't need to pull the rug out from everybody on day one. So, yeah, I think that probably helped those initial conversations, like to be able to step in and lead in, like, hey, we're not raising rents right away. We're just changing ownership. We're going to do our best to increase the quality of the park for everyone. And then that was an easy conversation for the bill back, especially for water, because some of the tenants, you know how it is. When you're not paying for something, you abuse it. So some of the water bills have been a little outrageous. Being able to put those usage, the usage trackers in front of them and be like, this is what you're using on a monthly basis. And unfortunately, or not unfortunately, it's just the way of the world. You're gonna have to pay for what you use. And obviously, there's pushback and complaint along the way with that. Let alone rent increase. So we'll get there. But to your question, I think that probably helped those initial conversations go a little smoother. It kind of easing their fears right off the bat that, hey, we don't have any immediate plans of raising rent, but we will be starting with utilities, so you can expect that in the next 60 to 90 days. Um, so yeah,
yeah, that's a smart way to do it because it's a lot at once.
it is. Yeah, it would have been.
I've In the past I've found that tenant-owned homes are different than park-owned homes completely when it comes to like taking over. Did you notice a difference in the type of tenant between those who were renting the house from you and those who were just renting the lot?
It was 100% park owned.
Oh, okay,
Yeah,
gotcha.
so the
Yeah,
few that we've turned over, we've done. So there's a couple tenant owned now, but that has all been within the past 90 days that we sold those. We purchased it 100% park owned.
gotcha. Yeah, that's especially important to make sure that you're not raising rents quickly because tenant-owned homes usually, even if you raise like sometimes like you double the lot rent if it's super low, but it's still so low in relation to everything else out there in the world that it's not high. But with a park owned home, it's a lot. Like, a lot renter might be at 300, 400. Park owned homes 800 and above. Like it's still coming out of their pocket. And so they're not susceptible to rent raises at all. And they also have a long list of like if you raise their rents $1, they immediately have a long list of maintenance you need to do at their home,
Hmm.
and it never ends. That's the part with mobile homes that I think more people need to realize before they rent them. Now, granted, some people rent out mobile homes and make a killing.
Hmm.
I tried it. I'm not gifted enough to pull that off. I don't know what they're doing that I'm not, but they're not doing it. You will get maintenance requests for mobile homes, and they're not a stick built house. There's so many things about them. Like if you wanted to, you could just constantly send maintenance requests and it becomes this thing. It's like, do I do this or not? It's justifiable, but if you just start doing every single maintenance request, it'll never stop. And I don't know how to describe it to somebody who hasn't been in a mobile home before, but parts of it, they're temporary houses essentially. They're not built to be lived in and rented out like that.
Hmm.
At least not the older ones. So it's a very tough thing to do. But
Yeah.
that's a good way to go, especially when you're renting the home. I think your approach was super smart. Like, hey, we're gonna fix things up. We're gonna improve the community. Did you have any people that like were just upset just the fact that you were the new owner?
No, That's what I mean. Like it was surprisingly cordial. The worst of it were the complaints, the to your point, the all those maintenance requests that had been kicked by the previous owner, they were all coming out, right? Because this was their
Yeah.
opportunity, new management, new ownership. Like, these are all my things. So I think the majority of my day was trying to be polite to kind of hear people out and make a note, but a lot of it was just, what you would expect, kind of the nitnoy complaining more than anything substantial.
Yeah. It's something you kind of have to triage.
Yeah,
The first
100%
time
miss.
I had park owned homes, I just told everybody, yeah, we'll fix that, we'll fix that, we'll fix that. And then some of it's like, hey, that's a little tiny little squeaky thing. Like that's not a priority right now, right? We'll get to it, but we have a tenant who doesn't have hot water. That's more important. So you have to kind of triage and make sure you do it the right way.
Totally.
Well, that's cool. And the other interesting thing I've found about renters in mobile homes is sometimes they just don't care,
Yeah.
right? And a lot of people come into this with the approach, and I'm glad you didn't do this. Like, I'm just going to sell all the houses and the people will be glad. Well, the problem with that is sometimes you get a person in that rent to own or just the house that you gave them, and they don't care. Like, they don't care that it's theirs now. They don't take ownership of it. They don't take care of the home. And then suddenly your park starts to slip. So I think your approach is genius, right? You're going to come in there, you're going to rent it, you're going to do a few at a time. And if you notice problems with the tenants, well, you don't want to sell them the house. You don't want, because as soon as you sell them the house, they're going to stay there for much longer than if they're just renting it. Hey, next year they're gone. You sell it to somebody else. So, has there been anything in the process of buying it that you've already pivoted on that you thought, hey, we're going to come in here and do this, and you thought, okay, actually, no, we're going to do this?
Kind of goes back to the infill question. There's a couple homes, and to be honest, I haven't entirely made the decision because it's kind of fluid with where we're at. A couple of the homes are so old that if I get to the point where the tenants do move out, I don't know that I'm gonna try to completely rehab them or even try to sell them, on a handyman type special because they're just so old and to your point about not being designed to be used for 50, 60 years like this. One of the pivots, so to speak, is likely a few of the really old homes just pull out and then have to infill some way. And that was kind of going back to the previous conversation of possibly just buying something, sticking it in there, and then selling that on a rent tone type of situation rather than trying to sell the one that's there just because they're in such rough shape. I think that's probably the biggest pivot. Otherwise, again, we're only like 90 days in. So otherwise, the plan has always been, take a 100% park owned and turn it into, over the long haul, turn it into 100% tenant owned.
Yeah, that's a really good way to do it. The other nice part about it is like when you are inheriting the park owned homes, you're kind of not paying for them. Like if you buy it right, you're basically just buying the mobile home park. The house just comes with it.
Mm-hmm.
And so like you should never buy a park where if you sell I've done this. I bought a park where I'm basically stuck renting the homes because I paid so much for it. If I don't rent those homes out, it won't do well. It'll like break even. I can't get the lot rent up enough to justify it. So that's one mistake I've made that I really regret. But what's nice about them is if you buy and those homes basically come free, you can rent to own them for long enough to basically treat that as your refinance. Like you can sell enough of the homes and get, if 5,000 a home and use that as your refinance. There's a ton of different ways to do it. I think ultimately if your plan is to hold it, it's really hard to keep those homes because they will just constantly need work. But you've got a maintenance guy at this point. Is he local? Is he in the park or is he just local?
He was a local guy, found him online, has a like public works background. He was a director at the county public works or something in the past and branched out, started his own little handyman slash construction type business. So found him online, had him do a little bit of work for me initially. We started talking. Good young kid. Well, I say young kid, he's probably my age and does good work. Hungry to work. So I had him, the first big job I had him do was we had one of the units ended up being an abandonment situation that the previous tenant just never came back. We don't know what happened. So we had to empty that whole place and it needed a lot of work. So I took him in there and I was like, hey man, here's kind of an empty slate. I just need this place livable. And he spent probably 2.5 weeks and just did a ton of work on that place. Ran into, as you can imagine from a 50-year-old home. It ran into more headaches than you can imagine, but got the place livable. Looks good on the inside now, and yeah, that was one of the ones we were able to turn around and sell on a rent to own. And then since then he's actually working on a third unit right now. Primarily floor, subfloors and flooring issues is a lot of what he's been doing. But and then just having him at the place local when I'm an hour away to just be like, hey, can you run over to this place to check on this, or can you whatever, right? So having him be and at the property almost on a daily basis, already on a job that I'm paying for, has worked out really well because he's there and can check up on stuff, and he's started interacting with a lot of the tenants. So he's a bit of, even though he's just a handyman, he's kind of the face right now, which has actually worked out well. So yeah, it's been super cool.
That's good. Yeah, having that kind of guy. Those with a park owned home heavy deal, they can make or break your experience with it.
Yeah.
But that's awesome. Yeah, that's really cool. There's one thing I'm blanking for a second. Yes. So how much do you think he spent, like when you remodeled that first one, how much do you think you spent on that first remodel that he did that you mentioned that was a really, really
all in, like materials and everything, or on him?
All in.
We were probably just short of 6K. All in.
Wow.
And
that's not much.
No. And that's when I was like, all right, I need to figure out how to hang on to this guy and keep him working, because usually when you get quotes, you kind of get that sticker shock with the quote, and you're like, man, oh man, I'm gonna have to haggle this guy. I'm gonna have to take some line items out. Like we can't be spending 10-12K on every 50 or every home that just needs some work. And he came back at like, I forget, it was like extremely reasonable. And then I started talking to him without coming out and saying it, and he was just kind of like, hey, what's the term? I'm gonna get it wrong, but bite the hand that feeds you, right? He's like, I can tell this place needs work. If I burn you for all your money on the front end, I know you're not gonna be able to keep me around longer. And so he just kind of had this foresight that was like, as long as I charge a reasonable rate, this guy's gonna keep me working for the foreseeable future, and I'll just
that's
kind of
what
have
matters.
a steady stream of income. And I was like, man, this guy's. He's onto it. So he's been super helpful, or just awesome solution for that reason, beyond just being good at a good worker and cares about his work, doing quality work, is he's extremely reasonable too. So that's also enabled me to help him out, right? If he's already overcharging me, then it's hard. But when he's staying late to try to finish something up, and I can kind of give him a little bonus on the back end, pay him a little bit more on the back end than we agreed, that just really helps the relationship as well, because, we're taking care of each other then, opposed to the other way around where we're just trying to. So that's been super cool, and hopefully it'll last long. Hopefully it won't burn out. My main concern is that he's working really hard and maybe not charging as much as he probably could somewhere else. And then he realizes that and either splits and finds other work, or we get to the point where he's just charging more than we can handle. But no, I think that we've gotten through a few of the real major projects that we knew we were going to have to take care of. So that's been great.
Yeah, that part of the situation you talked about there is tough, because how old would you say this guy is if you were to have to guess?
Say 35, yeah, mid-30s.
Yeah. So 30, that's like the perfect age. That or older, I think, for maintenance guys is great. Because I've found the problem is, like, I've hired some guys that are younger, like right out of high school, and they haven't learned that lesson yet. Yeah. And so they take the approach of like, oh, this guy wants us to do a job, let's charge as much as we can.
Yeah.
And the problem is, like, once that project's done, it's like, okay, well, I can't do another project for a month.
Yeah.
And now they're going to another thing, and they're doing this. And the guys who have learned that, hey, I'll make more money if I give this guy a fair quote. He's super easy to work with. I think mobile home park owners are one of the easiest owners to work for, because they want the place livable. They don't need, they're not going to say, oh, which backsplash? I don't like that color. Can you redo it? Like, that's not going to happen. So I think that's the perfect age for what you're talking about, because he's still young enough, but they've learned that lesson. Like, they're not still a maintenance man at this point in their life if they haven't learned to treat, like you said, don't bite the hand that feeds you. And I think this is a great point to our conversation earlier about the management. This exact situation is where a non-mobile home park property management company will train wreck a deal.
Sure.
Because they will get one of their maintenance guys into that home,
Yep.
and they're going to say it's $20,000 to fix this.
Yep.
And they're not wrong. They're not saying, "Hey, this is wrong." But what they're not realizing is like we don't have to get it. It does not benefit us to get it to that high quality of a standard with all new everything, because it's a piece of personal property. It's not real estate. That's not going to boost the value of this apartment complex. You've got to get it enough to be livable. And the advantage to that is you can keep it affordable to the person you sell it to. I've made that mistake on a couple of houses. I've spent $25,000 or something like that rehabbing the home, and granted, it's awesome. Sure. But nobody can pay that for it. Yeah. Nobody can buy it. So now I'm stuck renting it out for a couple of years, and I've just sunk my cash into something that, quite honestly, rents for $850 when a house otherwise would be $750. It's just not worth it. It's unless somebody's in the mobile home park space, they're not going to know that. They're not going to know how to do it. And that not only applies to the manager, but it also applies to the maintenance guy. Like they have to learn how to make it safe, livable, and affordable. And outside of that, that's really the main goal. It's a different. It's
100%. No, and that's why this guy was so perfect. And I keep saying like I'm going to do my best to hang on to him and make sure I keep him working or just maintain a good enough relationship to keep him around, because not only does he understand, he has experience working on mobile homes, which I think is also unique. Every guy who's a good handyman or every guy who's good at construction doesn't necessarily understand the ins and outs and intricacies of and differences of a mobile home. So that's just been a huge value add for him that has been awesome for us.
Yeah, that's cool. Keep him as much as you can. It's also tricky though, because on one hand you want to make sure that you keep enough work for that guy to stay interested. The problem is it's not an infinite project. It's 18 lots. It's eventually he's going to fix everything. The problem I found when I was nearing the end of the project, homes that he was going through in 2 weeks were now 2 months. Problems that were simple were now complex. Mm-hmm. And what happened is I ended up hiring the guy, and he worked for us for so long, for like 6 months, because we had several parks he was fixing these homes at. And it became his only thing. He stopped talking to the other people about those odd jobs here and there. So by that time that he was like nearing the end of our project, he lost the muscle memory of finding work. And so we were his pretty much only thing. So he had essentially became our full-time employee, even though that was never the idea. So I now will not hire anybody for like more than a 2-week period total. Like even if I need it, it's like, hey, 2 weeks and like that's all I have for you right now. And it's worked out better, right? Because those people don't burn out, because when they just work for you, I mean, the end goal is that you're not doing all this work, right?
Totally.
You kind of get it's better for them too, because they can keep the work. They have at least 2 weeks of steadiness. They can go out and give quotes and stuff on their free time on their way home. And I also tell them, like, I never want them to have to put my work before others. Like if they find a good project, go do it. Because at the end of the day, if I'm not under a timeline, it's fine with me if they do that. Mm-hmm. And it allows them to keep other work and stay affordable for me.
Yeah, no, that's good. Yep.
Yeah. So how did you found this guy on the internet? Were you just searching like handyman? Was it on Facebook or?
Might have been on one of the apps or Facebook. Yeah, but it was literally just search. And to be honest, I forget what I searched. It might have actually been like a plumbing issue at the time, like a minor plumbing issue. And we started talking. I kind of got a feel for his background. So then I took him over to the other unit to show him that. And then he started telling me like, oh yeah, and that was the other thing I did. I think he has like 2 acres of land, but he lives in a mobile home. So he does work on his own all the time, right? So, and he had plenty of experience with him. So all that came out, and he's a talker. So it was easy to just kind of let him tell his story. And I was like, well, I mean, here's this place. We're going to need to work on this here pretty soon. We were just getting it cleared out. It was a mess. It was gross. And I was like, give me a quote. Like we walked through it like this, exactly what you just said, right? Like, hey, don't need it fancy. Don't need top end finishes. I need it livable. We need to get the floors cleaned up. We rearranged a little bit to make it a little smoother flow. We added a little wall and a door on one of the bathrooms, touched up the bathrooms, some basic stuff. But I was like, hey, I need this livable. We talked through it. I was like, give me a quote, and let's see what we can do. And then that goes back to the last story where the quote caught me off guard, and I was like, yeah, man, let's do this. Yeah, it's been cool.
Yeah, it's those kind of guys are like salt of the earth, and you got to treat them right. and throw them other work. Like if you,
Totally.
what I have found, like I'll call other park owners and tell them, hey, you should use this guy,
Mm,
and they appreciate that. Like at the end of the day, I don't want anybody to any maintenance guys to rely on me, because back in my mind, eventually I shouldn't need a full time maintenance guy. The park
100%.
should be, a couple of maintenance requests here and there. But
100%.
so how has this deal that you've done shaped your buying criteria for future deals?
I mean, I'll have to think about it on the spot because 100% honestly, I'm like not there yet. Going back to the first thing we talked about, I'm so inundated on a day-to-day basis. I haven't even begun to, but I mean, I think it's pretty obvious, and we've had this conversation offline. And you talked me through this early on in this buying process, but staying away from the park-owned homes as much as possible. I mean, that's where the majority of the headaches come from. And obviously, I think what I am learning though is that's also why there was as much meat on the bone here, is because of all of the headache and work I'm putting into now, to get it to the point where it's a stabilized, lucrative asset to an institutional level buyer, even if it's on the small size in terms of park size. You know, um, if it's a park that has good, consistent income on paper that doesn't come with all the headaches of park-owned homes. Um, yeah, I'm kind of thinking through it on the spot right now, but I think that's probably the biggest thing. There's probably some there that I need to unpack in terms of market. I can't really speak to where I've landed in terms of market. I think we are a little bit fortunate again, going back to my original story about where this is in town. We're actually in a really good spot of town, and I think that ends up being huge because I've talked to a couple other park owners who have parks in other parts of this town, and there's rough parts. I mean single family can have the same issue, right? But if you have a property that's in the wrong part of town, that can make or break you too. So
Yeah.
that goes back to your due diligence, your market research, and understanding where you're buying. Um, yeah, those are just a few things off the top of my head, but yeah, I can't say that I've spent a ton of time thinking about that yet.
Nice. So you're in the city limits with this
Yep.
property. What kind of involvement does the city have in your day to day operations, if any?
I mean, taxes at this point, we switched trash services from the city trash service, but other than that, like I said, once I'm in have enough margin to actually focus on this empty lot, then I think that will involve the city a little bit, but no, on a day-to-day basis, really none yet.
That's awesome. That's
Yeah.
that to me. If I could sum up why, because I do have some parks that are all park owned homes, and they're not that bad. I have one that's in the city limits, and it's a nightmare. And the reason is the city passed some ordinance where every single unit that gets re-rented has to be inspected across the board, everything. And so every time we have to get every time somebody moves out of our mobile home, we've got to have the city building inspector come in there and inspect it. Which fine, no problem. But again, the building code he's enforcing is based on stick built houses. Mobile homes are just built differently.
Totally.
So to show you how much of a problem that could be, we had concrete steps at every single home. Basically, just a like you can buy them pre-made. They go up to the house. They have handrails. They were fine. We have 20 houses there that are park-owned homes, so that's 40 sets of concrete steps. Building inspectors like, hey, you
Yeah.
know, you need to have a 4 foot by 4 foot landing minimum at each one. So we had to build 40 decks over the course of like the first 2 years. Not totally 40 because some people haven't moved out, but he's like, so it's just like, gosh, like that. That's what I mean. Like that doesn't really matter. Like the whole idea is that like in the case of a fire, people can escape. They can escape just as easily on concrete steps that goes straight out. But what can I do? And so that's one of those unexpected things where it's like, man, I didn't really think about how much their input on my operations mattered. Now for
Well,
tenant-owned homes, who cares, right?
yeah. Yeah. And to be honest, again, I'm only a little over 90 days in. I'm sure, I'm just trying to manage my expectations. I'm sure there are going to be some more things that I uncover along the process that are in front of me right now that I have no idea about, stuff like that, that you just don't know until someone comes around and is like, by the way, like you got to do this, and you're like, what? Hopefully less than than not, but we'll see.
Yeah, it's one of those things. It's just a learning curve, and like that's it. I bought another park in that market, and I knew it going into it, and it was fine.
Yeah,
Right? It's just
sure.
the expectations of it. And we've been talking a lot about the headaches, but the truth is, like, if you do a mobile home park right, gosh, they are so freaking simple, and
Hmm.
they just run like clockwork. But it's one of those things, like to get it there, yeah, it's a hell of a lot of work. Nice. So I get it though. Like you're right, 90 days in, you're still trying to figure out like, hey, how does this affect future ones? Here's an interesting question I would have that will kind of lead you to that conclusion. How much time a week do you think you spend towards this deal in terms of hours? Like how many hours a week is it taking you right now?
Currently, like on a management perspective, I mean, I'm on doing something along with the rest of our portfolio. Like this is the most consistent asset, obviously, that I'm working on. So I'm putting in, geez, let's try to summarize it. I'd say at least 2 hours a day during the work
Okay,
week.
gotcha.
And and
What?
sorry, real quick, and I'm thinking about this. That's the days that I'm not going down there. Because it's a little over an hour drive, there'll be at least usually one day a week where I'll chalk up to going down there and dealing with stuff. And on that day, I'm down there for 6 hours. So.
What I would tell you in terms of shaping future buying criteria, I wish I would have done this sooner. But if you apply an hourly rate to what you're doing,
Sure. Yeah.
and then you build that into a deal, you'll kill so many deals just for yourself.
Yeah.
It it's annoying at first, but it's the reality. So
Totally.
that's how I got my buying criteria from. Like I bought a park as small as like it had 7 existing lots and we got it to 15. It was whatever. But when I look at the time I spent on it, how many 50 lot deals did I miss out on that I'll never have a chance to buy again because
100%.
some institution bought it?
100%.
So it's when you apply that, it will just wipe away some deals for you. Because an interesting problem with mobile home parks, it's a good thing, it's a bad thing. The fact that you can scale so quickly, you can buy a park for the price of a duplex in most markets that has 30 lots. Now, huge advantage there that, hey, if one person moves out, it really doesn't have changed much at all. And people rarely move out, so it's relatively stable. The flip side of that is to get, like, you now have 30 tenants where you would have had two. So I think ultimately it is still a pro, but it does, if you're not careful, it can suck up a lot of time if it's a lot of headache with those 30 units. If it's 30 relatively smooth units, it's an advantage. If not, it's like it works exactly against you.
Totally. Yeah,
So,
the numbers can work for you and they can quickly work against you if it gets out of control. So 100%. Yeah, no, and to that point, there have been on the bad days where my criteria have been no more. Like this is it. We're not doing That's been the criteria, right? Then I'll calm down but yeah,
yeah, every real estate asset has problems. Like
totally.
I got to a point where I literally gave up on mobile home parks. I'm like, I'm only going to buy storage because somebody was talking to me about storage, and I was like, that's the solution to my problems. And then I worked on it for a couple months, and then I was like, no, it's not. Like behind, like when you go deeper, everything has its issues.
That's what has its
Everything.
problems, yeah.
Even if you're a passive investor, okay, well maybe you invest in someone who's a total turd and takes your money. Like I know a guy who did that. He put 50K into a deal, and the guy just ran off with it. So everything has its stress. It's just about like what is the most worth it, and just honestly, like you mentioned, managing your expectations. If you knew how much work this would be, you'd probably still do it. And that's good to know, but it would just be like a different expectation. And that's true of me. Like I've bought deals now that I know how much work is involved, and they don't stress me out. Something comes up, and it's like,
Mhm.
okay, yeah. But the deals, even now that I know what it is, even those first parks I bought, when something comes up, I'm just like, damn it, why do I have to do this? But it's a
Totally.
live and learn process. But
Totally.
have you done a cost segregation study on your park yet?
Not yet. That was a big kind of. I went back and forth. So we bought right at the end of 2024 and didn't actually put it into service in 2025. January 1 is like our start date essentially because we closed. I mean, that's another story for another day. But we came down to like the last possible day that we could close for whatever reason. It probably had to do with taxes and stuff. Now that we're talking about cost seg, but the seller was like adamant, like we are closing in 2024 or this is off, and we're and I was like, all right, well, let's see what we can do because they had slow rolled it since like August. So I was jumping through hoops to try to pull this off. So we closed like the 27th of December. Yeah, the attorney was only open like one day that week too between Christmas and New Year's and everything. So anyway, to your point, To your question, no, I haven't yet, but I plan on revisiting that again when I get a little bit of margin to kind of re-engage. I think that'll be a good play for 2025.
Yeah, and to your point, I closed a lot of deals as a broker. I've closed some as a buyer. They always take to the last day.
Yeah,
always. Like it doesn't matter. Even the last deal I did, like I immediately talked to the bank who has the loan on it, and like, yeah, we like it. I had everything lined up, and I was like, I had a 90-day period. I'm like, this might be the first one I close early. No, it closed on the day. It closed on the day, and I was worried it might extend. I think what happens is like when you close, you rely on a lot of third-party people, and they know it all kind of comes together at the end. What I found to be helpful is to give myself an optional 30-day extension for like extra earnest money or something. So when the bank asks for the loan, or when the bank's going to ask you for their contract, the whole reason the bank is, yours was self-finance, so it's different. But when the bank asks you for their contract, what they're really asking for is like, when do we actually have to start working? They're gonna start 3 weeks prior, regardless. Even if it's 2 years out, they'll start 3 weeks prior to closing. So if you get it to where it's like, hey, our closing date is this, but somewhere in the contract you have an option to extend it 30 days, just with an extra $5,000 earnest money or whatever.
Yeah.
It'll probably that's the date everybody will work to. And once that happens, you're good. And then in the back of your mind, if it gets pushed back, okay, let's put in some extra earnest money. We're going to use it to close anyway.
Yeah.
And you get yourself more time. But it's just always seems to go that way.
Smart.
That's why I left the broker world, because it was just stressful. Like I was never excited to close a deal. I was always just relieved.
Yeah.
Because it's just like, gosh, is this going to close? Is this going to close? And then like you should be getting excited as it gets closer. But that was always when people were going to start retrading. And that's when it got shakier. And it's like, oh gosh, like you just on pins and needles, like you want to be excited because you're going to get paid. And then it's like, nope, now it's dropping. It's just like, oh, but yeah.
I believe it.
So I would tell you, don't feel bad about taking all. It's just for whatever reason, just always takes a full amount of time to close.
Yeah.
But that's just the way it is.
To that question though, what's your thoughts if you have a couple more minutes? What's your thoughts on cost seg? Because I've gotten kind of mixed bag answers on that as well when I've kind of done some research.
I think it is worth every penny. And it's incredible. I don't think, now I say this as I didn't know. I had bought 6 mobile home parks before I understood what a cost segregation study was. I just like, oh yeah, they're good for taxes. I just said that. I didn't really know what it meant. We never did any. It wasn't until somebody sat me down and explained how much it can save us on taxes if we do it. But to like quickly summarize it, most of the time you can take a mobile home park, whatever you pay, and this is overgeneralizing by a huge long shot, just because I've literally had an entire hour-long podcast about cost seg studies. Just say with a typical mobile home park, you can write off 70% as depreciation. So if it's $1 million purchase price, you can have a loss of $700,000. Now, if there wasn't the current tax code, it's still worth doing, because rather than that being depreciated at 39 and a half years, you can depreciate most of that at like 15 years. So it's better. With the current tax code and what they're talking about, what the House approved that we're still waiting on the Senate to approve, you can write off 100%, potentially 100% of that $700,000 loss in year one. So, and it doesn't matter how you financed it. So, like I'm working on one right now where we're buying it for about $1.2 million. So, for easy math, let's say $800,000 is a loss. Well, we might put down $400,000. We might have $800,000 for the depreciation on $400,000. So, that's huge. Now you hear, Trump at the debate talking like they were trying to get after him for not paying his taxes. Well, that's how. You take these huge losses on stuff, and then you don't owe as much. I think it's totally worth it. If I were to break down everything I've invested in, the actual money you save on taxes from paying for a cost segregation study is probably the highest ROI of anything you buy.
Yeah. Or
anything you could invest in. Now you can do it like unofficially. I think there's some accountants out there who will just claim like 50%, and if it ever got audited, like they would have to prove why they think it was that. Where a cost segregation study basically just gives you the ammo to like, hey, if we ever get audited, we can answer to every dollar why this is the way it is. And it's super interesting because people get into mobile home parks, and I'm guilty of it. I was like, I'm just buying land. There's not much to appreciate. That's why I never did one.
Mm-hmm.
I never thought it was worth it because they're about like $5,000 or $6,000 to do a cost seg study.
Yeah, I think I
And
got a
then,
quote for like 3 for this one because it's smaller, but yeah.
yeah, exactly. And it's like that will, if you paid 640 and they'll let you write off, 450, 500, it's huge. Now, you are probably more, it's for you, it's probably more worth doing than anybody else because you probably have the hours to qualify for real estate professional status, which is that's another conversation of itself. It's like, it's so confusing, but I'd say it's worth doing. It's also worth learning about because for your perspective, you're going to be raising money. I could tell you people who've invested in my deals, that's like their primary question. What is the potential tax savings? Because it's actual money people save in year one. Now it's tough because like they may be a real estate professional, they may not. You can't give tax advice, and it's not for sure, but it's right now it's at 40%. So you take that 70% number. Well, 40% of that 70% is what you can claim in year one. So it's still really good. But if it goes back to 100, man, it's
no brainer.
Open season. Yeah,
totally. Good. That's good to know.
Yeah, and you can also there's a lot to it, and like once you it's like an icing on a cake. Like you shouldn't buy a property for those reasons, but it's just if the government's going to let you take advantage of it, do it.
It's another positive variable for sure.
Yeah. Was there anything that we haven't covered yet that you think has been interesting about your first park and like how the experience is going?
I alluded to it briefly, and we don't have to spend a ton of time on it because it's not mobile homes park specific, but something especially kind of in the learning growth process that has been really fascinating to me, and really eye-opening, and I've mentioned to you briefly before, and you're heavily involved in now as well, but was the capital raising. This was the first asset that I raised capital for, and in the grand scheme of things, it was quite a small number, but it was, again, I think it was a perfect amount to kind of cut your teeth at. We were able to bring in 3 investors, and it required me to put together, a lot of products, really work through my pro formas and my projections well, and be able to communicate a lot of what we just talked about in terms of advantages and how I felt the market was going to perform. So there was just so much additional thought that had to go into the process because I had to pitch. Right. And there was obviously, especially the first few conversations, were quite intimidating. But once you get to the point where you know your product well and you're just explaining the product and basically this is where we're at, this is what we're offering, do you want to be a part of it or not, the conversations ended up going pretty easily. And then to your point, there's so many people out there who have the capital but aren't in the position to be doing this, B, have no desire, and C, want a place to park their money, right? So the whole capital raising piece, right, of real estate was obviously, I've only scratched the surface, but was interesting. I learned a lot. I'm really glad I had to go through it because I think I've got a basic understanding of what it will look like to do in the future for considerably larger asset.
Yeah. Well, the part, it's not just the pitching aspect of it. I think it's the fear of losing people's money. That to me is like
100%.
The scariest thing. I had a close family member lose a lot of money for people, and I have seen that is a bad, and it was no fault of their own. It was basically switching economic, and this wasn't in real estate. This was a business, but
Sure.
That's people not talking. That's people not going to Christmases. It was horrible to go through.
Totally.
And I didn't raise money on our first like 5 or 6 deals we did because I was terrified of it. And even now I'm terrified of it. But I can tell you from a perspective of how well those deals that we did, just me and my partner, versus when I had investors on the line.
Yeah.
Like I analyzed it like I was going to Mars or something. Whereas like for some context, my partner and I were both mobile home park brokers. We knew a deal is good in 50 seconds. Like, it doesn't take us much. Like, we would just hear a little bit about it, like, oh, that's a slam dunk. That's essentially what we did on our first couple parks.
Yeah.
It's like, we did underwrite well. We knew how to. We were just like, what's the point? We can tell this is good.
Yeah.
And we made tons of mistakes by doing that. But in the grand scheme of things, but when I underwrote it for my, deals when I had investors involved, gosh, like I thought of everything I could think of. And by the time I got to like a pro forma, people are looking at it like, this doesn't seem that good. But I was just so freaking conservative. I'm like, I will not tell them something that I don't think I could do. And then by the time it's like, I'm almost like on the call, I'm just like trashing it. Like, this could go wrong, that could go wrong, this could go wrong.
You probably shouldn't even do it.
No, it's like, and in one of them, it was like, gosh, like, I had somebody say, like, this just doesn't seem that good. And I was like, yeah, I know. And then, we end up closing and it appraised for almost 40% higher. And I was like, and that person didn't invest. They called me back like, look, I'm not going to oversell people ever, What I have found interesting about raising capital too is that, and I did this calculation the other day, 35% of my total amount I've raised so far is from people who own mobile home parks themselves, not passively involved in mobile home parks, but like they could go out and they have owned a mobile home park themselves. So a third. If that doesn't tell people like, hey, there is work involved, and it is very, like, they have more competitive advantage than anybody else on the planet to go do it. If they're making a decision, and I'm not trying to say that to toot my own horn, but it's like there is work involved. Like my wife and I are LPs now. It's as soon as you learn, I mean, mobile home parks are probably the simplest asset you can get into. And they quickly learn, like, gosh, there's a lot to know. I would never in a million years go out and buy an apartment complex myself because I'm just like, I am so afraid of what I don't know now. Like, there's no way I would ever get the stomach to do that. But from your perspective, having done it on your first, it's awesome because you're not gonna have the bad habits that I had. You're gonna know how to do things right. You're gonna report things right. You're gonna no matter what, your ass is gonna be out there making sure that the project goes well because if it's your own money. I hate to say it, but you kind of don't care as much.
No, it's not as big of a deal. Well, no, and that 100% leads to, or has led to, the multiple hours a day, a full day a week being down there, and the stress of like finding appropriate quality management to be able to work this towards is all directly tied to the fact that we've got considerable amounts of other people's money involved, and it's good. It's a motivator to understand and buy well, like you were alluding to, and then B, to execute well too. So I think it's a good motivator. It does obviously bring its own level of stress because you are responsible and accountable. But that's been an interesting piece of the growth curve.
Yeah, and stress is good. People tend to think like avoid stress. Like
you're not growing if you're not stressed, right?
Exactly. It's just like working out. If you don't ever push yourself and get into a situation that you have to figure something out, I mean, you don't learn. Everything that I've learned, I feel like that has led to where deals go well now, like pretty consistently, is because I had deals that just went absolutely haywire. Like, I bought a park very similar to what you have, right? 18 lots. Mine was 20. It was all park-owned homes. I had 7 people move out in the first month. If I could explain the entire story to you, it was no fault of my own, no fault of the owners. It was just this weird situation where but it was one of those things where it's like, okay, I had to think on my feet. My pro forma, like, okay, I try to be conservative. I don't assume half of the people move out or no deal, whatever work. Yeah. But I kind of had to just think on my feet, figure it out. And that's the kind of stuff that I think makes people really, really good. And I never shy, and I don't think anybody should shy away from the mistakes you make because that's one less mistake you will make.
Yeah.
Right? And you'll find like raising money is, I think, probably the easiest part of real estate. Honestly, like it's really just a numbers game. Like you have to know enough people who think the way you think.
Yeah.
But like I said, like there's very few people out there who can find good opportunities. There's a lot of people with money who just want it to work for them.
Totally.
And so that's the part it's hard. It's hard to become that. It's always a learning curve because the markets are always shifting. But I think you're off to a really, really good start, especially having raised money on your first deal. That's the hardest money you'll ever raise because you haven't done it before.
Yeah.
People are investing in you. They may not have said that, but they don't trust the park. They trust you at that point.
No, I appreciate that. Yeah, I agree. I'm glad I did it, and the stress is good, and it will be good. I think the day I'm able to pay the first investors back, on this first deal will be super cool, kind of a milestone. So looking forward to that.
Yeah, and that's the most exciting thing in the world. I remember the first time I sent out distributions that wasn't just me and my partner. It felt so good. I didn't get any of it. I still haven't got any money from any of the deals I've raised on. But it just feels so, it's just like, It's a relief. And that's really all it is. Like, real estate is not a get rich quick scheme by any stretch of the imagination.
Totally.
It is a get rich for sure, slowly plan.
Mm-hmm.
And that's why I think guys like you, military background, you're in it for the right reasons, because nobody on the planet joins the military for money.
Yeah.
Like, even if it's like, okay, maybe it's a stable job, whatever, but like you're signing away your rights for what, $20,000 a year. Yeah. In fact, I remember Auburn, I had enlisted after going to college. I remember Auburn sent me like, hey, how you doing a year out from graduation? And it was a survey of like how much you're making, so they can. My number was not an option. It stopped at 40,000, and it was like I just picked 40. I was like, that's not even right. Like, all the veterans I've met get into real estate for freedom. Like, that's what they want. They've had can't even have the haircut you want, can't wear what you want. They just want the freedom to say, you know what, I just want to live my life the way I want to, and that's why a lot of them get into real estate. So I love having you on here kind of talking about how you've got into it, the successes, I don't want to say failures, it's just a learning curve. Everybody has to go through it. You got to find out how to do it the right way, and you're doing awesome. You're killing it so far.
Thanks, man. No, I appreciate it. I really appreciate you having me on, and as always, really enjoy our conversations, because I always walk away with some good nuggets. So thanks, man.
So what are you working on now? After that, like, how can people get in touch with you?
Yeah, like I said, working on now is pretty much just this, with the hope to be able to transition back into more of an acquisition mindset soon. And then I do something we haven't talked about, but kind of related. I do a little bit of private money lending brokering on the side. So when I'm not kind of head down in this, I still try to piece together private money deals, which is kind of a byproduct of being in the capital raise space. Easiest way to get a hold of me, to be honest, right now, I'm not real up on the socials, which I know is where most people end up connecting, but I'm just Luke at real-life-real estate.com is my email, and that's probably the easiest way. So yeah.
Why, you're a real person. Every time someone gives me like their LinkedIn, you reach out to them, it's just like a bot.
Yeah.
So no, I think people will appreciate that.
Yeah, no, and I would love the email. I would love to chat with people, and from there, we can exchange phone numbers and get some conversations going. But I spend enough time with my other stuff that I haven't gotten the social platforms up and running on a full level yet. So,
well, what I've found, and this is the last note I have, is that of all the asset classes I've looked into, mobile home park investors, for whatever reason, are the most eager to work with others that I've come across.
That's awesome.
And I've thought about it a lot. I think what it is because the biggest thing against mobile home parks is their stigma.
Mm-hmm.
Every mobile home park wants another actual mobile home park operator to succeed. Like, I mean, your park is near my region. I don't care that you bought it. I would much rather see it go to someone like you, do a good job, get the value up. And when I go to get an appraisal, they're going to look at this park not too far away and say, oh, look at this park. It's doing really well. It's worth whatever.
Sure.
And I think that's one of the coolest things about mobile home parks, is that all the investors are willing to work with each other. Not even work with each other, just help each other out for nothing. They want to see other people succeed.
Yeah, that's awesome.
Yeah, that's one of the coolest things I've found about it.
Cool. Yeah.
All right. Well,
Thank
Luke, I appreciate you being on here. This was an hour and a half. I always wonder if we're going to have enough talked about it. And,
always do.
I'll probably max it out to memory all these videos. But appreciate you taking the time.
Yeah, thanks, Jeff. Really appreciate it, man. Good chat.
See ya.